Welcome back to Market Day Report. We have had a busy Thursday here, keeping the informed here with our export numbers, grain and livestock. Also look at the ethanol numbers here as well. And for the trade, one last time, looking at grain and livestock, we go to Chicago, and Oliver Sloup joining us from II Trader. Been quite a week here. We're not done yet here, Oliver. You were mentioning coming on here, we might, Rob, upstairs get the crude oil ready. You were saying you're watching crude oil the last hour or two.
Yeah, crude oil has been a very interesting, really over the past week to week and a half. I believe we're now positive 8 out of the last 10 sessions, despite the U.S. showing increased production by 152,000 barrels a day during yesterday's report. So we continue to climb higher. I'm not sure what this is. I think a lot of it's probably coming from the weaker dollar. I know there has been talks of a possible OPEC meeting, but I don't think anybody's putting too much stock into that. So I think you're probably seeing some short covering. We do have these September futures to go off the board on Monday. So I think you're probably just seeing some short covering into that. And I think the closer you get towards $50, I think that gets towards the top end of the range where you might look to see some value to the sell side.
Exactly, yeah. I was going to say $45 to $50, not just this week or this month, but almost all summer. It seems like that's been the range. And we get close to 50, they start to pull back. All right, to the grain. So thanks for that update. Let's take a look at the grain trade here now. Your thoughts in the corn and beans, starting much lower, but coming back the last couple of hours to near break-even money.
Yeah, they're stabilizing nicely. I've seen some consolidation, specifically in the corn market, a little bit quieter of a trade. 337 is going to be the level we want to close out above today and to round out the week. That's the 20-day moving average, which has kind of been a line in the sand for us. If we're able to get out above this on a conviction close higher, we could see the funds start to cover and press us towards the next level, which is 346. If you recall, that was previous lows, so the previous support now becomes resistance. But the more significant level above that we're kind of eyeing and hoping for is that 352.5 level, which is a significant Fibonacci retracement level.
I would think that 350 sounds a little harder to get to, 352, especially from where we have been. Your thoughts in the percentage chance that we can get to 350?
Well, we do have some work to do, but it is nice to see that the market is stabilizing. The last thing I want to see is a close back below the 20-day moving average, which is at 337. All right. So I think if we do close below that, then we retreat to the bottom end of the range at 329. So I like the long side here with a known stop below that 20-day moving average into that mid 335 level.
All right, and soybeans starting 17, 18, 19 cents lower the first hour of trade, come all the way back now. They're not plus right now, but they're very close, down only November 3 cents.
Yeah, very impressive. We went and the market trip stops below that $10 handle early this morning. We were kind of hoping we would see that 989.5 level, which has been pretty significant to us over the past couple of months. We weren't able to quite get there. The market rebounded nicely, got above some technical levels intraday. But now the major line in the sand that we've been looking at, and I've mentioned it on your program for the past couple of weeks, 1027 to 1032.25. That's the 100-day moving average, as well as the 50% retracement, or basically 50% of this year's range. That's technically significant to us. Only a close above this do bulls really feel like they have some momentum going in their favor. A failure to break out keeps the bears in control, and we could see a retracement back below that $10 handle.
All right, and with that, we'll take a break, come back, and we'll check the livestock trade with you, Oliver, one last time, looking at the cattle and the feeder cattle trade, and get your thoughts there. I'm sure you have some numbers for us to watch today and tomorrow to end the week. Oliver Sloup, II Trader, back with us in 1 minute. Welcome back to Market Day Report. Let's go back to Chicago. We take one last look at the livestock trade, and again, helping us do that, Oliver Sloup, II Trader, and looking at that beef trade. First of all, live cattle, feeder cattle numbers. I'm sure you're watching some there as well, the October cattle.
Yeah, we certainly are. Let's start with the live cattle for convenience. We are starting to see the market roll over, and really we've started to see this over the past week and a half. And I think this is kind of the market taking a breather. We've had a nice run higher prior to that. Now we're seeing some profit taking from the recent longs and maybe some shorts stepping back into the market. Key technical levels that we're looking at around that 114 level for October. The bulls really want to see, conviction closes above this level. Right now, as it stands, it doesn't look like we're going to be be able to get that to round out the week. So we're seeing some pressure come in. And the line in the sand for us on the support is 108.52, a little bit of ways away from the market. Might not see it this week, but potentially next week. That is the gap from late July that we have not covered yet. So that's going to be key for us.
Very good. And right now, those of the folks tuning in on the radio, October cattle are down again below the 111 level, 110.50. That's down $1.90, again near lows of the day. And our take a look at feeder cattle here. Feeder cattle just in the last few minutes making their lows of the day. Talk about September feeders there around 143.
We're really looking to see how it closes today and round out the week to put us in a position going into next week. 143.83 to 144.08 is a 120-day moving average, respectively. The bulls want to maintain price action above this to encourage more buying here in the near term. I think a failure to do so presses the market back towards the 50-day moving average, which comes in at about 141.53. So that's kind of the range we're playing. If live cattle continue to roll over, I think that's going to carry over to pressure in the feeder cattle and get us closer to that 141 or the 50-day moving average.
Very good. And that leaves us looking at the hog complex here. And lean hogs higher yesterday by over $1, but giving a little bit of that back here today. Would you say it's stabilized or not, October at 60.5?
All right, I was going to say, on your program, I've been saying I've been sitting on my hands, but I think I'm going to start dipping my toe in. We got above the 63 level that I wanted to see. We weren't able to stabilize above that level, but it's very interesting. We've closed positive 6 out of the last 10 sessions, which signals to me that we might start to find a basis. Shorts cover and buyers step in. I think it's going to be extremely volatile in the near term, so we're kind of looking at the options as a way to play it with limited risk to the buy side. So I think right now, or in the near future, is a good opportunity to find some value to the upside here in that lean hog market.
Very good. Thanks for all that information. I'm sure listeners and viewers writing down those numbers and watching along with you. And Oliver, we look forward to wrapping things up and having you join us tonight for the Rural Evening News.
I'm looking forward to it.
We are too. Thank you. Oliver Sloup, live from Chicago. Again, he'll have closing comments tonight in during our evening news.